Hello everyone, welcome to the Ichimoku.co daily stock market review for the trading day ending Tuesday, April 7th. Firstly to the S&P 500, and here we see the final candle on the chart is in an uptrend. That uptrend started 2 candles ago. Previous to today's trading we had a very strong candle that attempted to break out up above the highlighted yellow zone and above the Kijun-sen and the Tenkan-sen indicator. Today we didn't see any strong follow-through. We do see a continuation of the trend to the upside, but we see a black body candle forming and a small black body compared to the large white body of the previous day. And it suggests that the net momentum that was to the upside for the previous day's trading has ended, and we have a small amount of net momentum to the sellers. We've also seen the buyers lose control. They had control for the previous day's trading, and they've lost control with the market closing down towards the low of this current candle. The large shadow on the top of this candle highlights the strong rejection from above that highlighted zone, and as the market tested very close to the 2093 previous level of resistance and then support, and it does suggest that the sellers have come back into the market for today's trading. The problem for the sellers obviously is going to be the support around the top of the Ichimoku cloud, and there is a good likelihood of the buyers perhaps coming back into the market and breaching outside of the top of the yellow zone, as we saw for the day prior to today's trading. The problem is that the buyers did lose commitment up above that level, so we will be watching very closely. There is solid support down below the top of the Ichimoku cloud around the Tenkan-sen indicator, roughly about 2072, and then extending down through to the bottom of the cloud about 2045 and the bottom of the highlighted zone about 2040. In terms of direction in this market, no clear direction in this market at the moment. With the market closing just at the top of the cloud, it suggests that we don't have any solid upside trending action in the long-term time frame. Very close to being neutral, very close to trading within the cloud, so not a lot of direction there. The market has just closed below the Kijun-sen indicator, so only just bearish in that medium-term time frame, and closing just above the Tenkan-sen indicator suggests that we only have a slightly bullish market in the short-term time frame. So not a lot of direction here in this market. And obviously with the market trading within this large congestion area over the last month or so, it certainly does suggest a lack of direction. Let's next take a look at the Fibonacci extension, and here we see the market testing almost to the 100% level, so we're examining the relationship of this current first time frame uptrend that the market's in to the immediate previous uptrend, and we see the market testing above that 78.6% level, very close to the 100% level, being strongly rejected from there on a negative candle with the sellers taking control and suggesting that there is a good likelihood of a change of trend to the downside. And also with the Fibonacci retracement of the prior downtrend, and we see the market testing just above the 100% level, being rejected from there, setting the market up for the change of trend. But obviously the sellers are going to have to be very strong to change the trend. We have that solid support at the top of the Ichimoku cloud and through to the Tenkan-sen that may not let the sellers continue with the control that they've had for today's trading. Now just looking at patterns, and here we have something of an ascending triangle forming. We have the congestion, and that's what we've seen over the last week and a half, with the market testing up to the previous peak here and being rejected from there. And it does suggest that there is this ascending type of triangle forming. Ascending triangles in this case may be a reversal. The only problem here is that the size of the trend leading into the pattern is just really out of sync with the size of the actual pattern itself. The congestion area here is more than half the size of that trend leading into it. So not a lot of faith in any particular target being met if we do see a breakout. But the important thing here is that we do have congestion taking place following some sort of trending price action. So we will be looking for a close either above the upper barrier or down below the lower barrier. And in this case, probably more likely to be above the upper barrier. Next to the bands, with the S&P 500, and here we see the market trading within the bands, and we've been trading within the bands for some time, roughly about a week or more. Previously we saw the market testing down below the lower band, lack of follow through, an indecisive candle following that candle suggested that the sellers weren't necessarily as strong as we thought, trading back to within the bands, finding support at the lower bands, and now the market for today's trading testing almost to the upper band and being rejected from there, finding resistance at the upper band. So a market that lacks any clear direction in that medium term time frame. What we'll be looking for here is a breakout in either direction, and we'd like to see a bullish or a bearish breakout and then strong follow through after that, and we're certainly not seeing that with the market at the moment trading around that or closing very close to that middle band. Next we'll take a look at some of the sector ETFs, and the first to look at is the energy sector ETF, code is XLE, and on the Ichimoku chart we see a market that's bullish in both the fast term and medium term timeframes by trading up above the Tenkan-sen and the Kijun-sen indicator, but the current candle has seen indecision enter the market, and for the second consecutive trading day the market tested above the Ichimoku cloud, and we've seen rejection from above there with the ETF failing to close up above there. That is an important level, and it does suggest that with the indecision entering the market we could see the sellers change the trend to the downside in terms of that next candle. If we do see that, we could see strong support coming in at the Tenkan-sen, trading around the $78 level. But importantly, if we look at the relative strength comparative to the S&P 500, and this ETF has been outperforming the overall market and trading outside of that band, and looking at volatility, we actually see volatility beginning to move up off a cyclical low. So it does suggest that there is a possibility that we could see the trend continue to the upside if the buyers are strong enough to actually close outside of the Ichimoku cloud. So an important trading day coming up for the energy sector ETF. Looking at the industrial sector ETF, and here we see the bottom of the Ichimoku cloud holding as resistance, and in a similar way that we saw with the previous energy sector, the top of the cloud holding as resistance, we see the bottom of the cloud holding as resistance. And for today's candle, strong price rejection for the second occasion, and also price rejection from above the Tenkan-sen indicator, with the sellers taking control. Looking at the relative strength to the S&P 500, strongly underperforming, and it's likely that if the sellers do come into the market once again, that's likely to continue that selling, and the market and the industrial sector ETF strongly underperforming the overall market. Just taking a look at a few stocks here, and looking at Twitter, TWTR is the code on the daily charts here, very solidly outperforming the S&P 500, the overall market, trading well up above the Ichimoku cloud, up above the Kijun-sen indicator and the Tenkan-sen holding a strong support and a very strong bullish candle, breaching through the resistance from roughly about the $52 level and closing up above there in a strong bullish manner. Buyers in control and committed, and all of that supported by the Chica span being above the corresponding price action. Volatility ticking up, and not fastly, but there certainly is a likelihood of that to accelerate. And looking at the relative strength comparative to the S&P, strongly outperforming the overall market, the S&P 500, so suggesting that we're likely to see Twitter continue to develop to the upside. Next, moving to Facebook, and FB is the code, and a market that continues to trade up above the Ichimoku cloud, so a bullish market in the longer term time frame, but a market that's rather indecisive in the medium and fast term time frames, with Facebook closing between the Kijun-sen and Tenkan-sen. So we have a slightly bullish market in the medium term time frame and a slightly bearish market in the short term time frame. Now for today's trading, importantly, we've seen the market find resistance at the Tenkan-sen, with the sellers taking control in this candle, and it does suggest that there's a possibility of the market trading lower in the short-term time frame. Looking to the Kijun-sen, trading at roughly about 81.70 to hold as strong support, and if the market is strong enough, if the sellers are strong enough to breach through that area and breach through the swing low about $80.87, we could see Facebook trading significantly lower. Looking at the relative strength comparative, and over the past week or so, not strongly outperforming the S&P 500 as we saw previously, and interestingly we see volatility forming a peak here, and it does suggest that volatility may begin to come off, and if we see the market retrace and congest as we've seen happening over the past week or so, we certainly could see that volatility start to trend down, and it could mean the end of that strong uptrending price action that we saw previously. On the right hand side, just looking at the bands with Facebook, and the market tested almost to the upper band, trading at 83.80, and if the trend does continue to the upside, that's an area where we're likely to see strong resistance coming in. If we do see something come into the market in a change of trend, looking to the middle of the bands, roughly about 81.50 to hold as support. Moving next to Apple, AAPL is the code, and on the Ichimoku chart we see the market maintaining price action up above the Ichimoku cloud and above the Kijun-sen indicator, only just, and this suggests that we have just a slightly bullish market in the longer term time frame and only slightly in the medium term time frame, but so close to both of those indicators that it's not significant, and it does suggest a neutrality within those timeframes. Looking to the upper cloud, the upper part of the cloud, to hold a support if we do see selling continue, and for today's trading we see this black body candle with the sellers taking control. And just within the cloud we have the Tenkan-sen trading at 125.36, and we'll be looking to strong support there. Watching the relative strength comparative, this line here, and it's been hovering around the middle of the band here and slightly below, certainly not above, and it certainly does suggest that that strong outperformance that we saw previously has ended, and we've seen the market retrace and congest over the last month or so, and we're seeing that with the very poor activity in terms of relative strength. And in terms of volatility has moved off this cyclical high and is looking to form a cyclical low. Now we could eventually then see volatility begin to trend up again, and that would suggest that we may see uptrending price action, or we could see downtrending price action and a breakout up above the highs of this congestion area or down below the lows of the congestion area. But bearing in mind that we have solid support within the Ichimoku cloud and to the end of the Ichimoku cloud down to around 119.